above.
Hi, Warriors. How's everyone doing today? For you energy traders, we have Anas El-Haji today at the bottom of the hour. Hiya, Blake and
Morning,
Ingmar. How are you, buddy? RC and AJ and Rand wants to hail me with what? A hail full of bullets? Huh?
Mary.
Come on.
Mary.
Yeah, Ryan, how are you? Okay, so kind of a quiet day, getting ready. Hugo, how are you? All right. So I wanted to start off.
Quiet days. I hate quiet days, Dale, because all you Yanks sit on 1 minute charts and then every 5-pip move is amazing.
Yeah, it definitely seems to be quiet. You know, felt like that earlier in the week that we might be just waiting for the NFP. I don't know if the Euro's going to wait. I think we're going to go back down there and test the lows, Ryan. EG looks like you might get your breakdown.
Yeah.
It's getting closer, right?
Yeah.
Okay. So everything is, you know, metals are lower.
Yeah.
What's higher today? Okay. So yen, nice call on that support level yesterday. And, you know, we had these divergences. So we talked about this. So, I'm looking to sell rips here. I know that we're getting an uptick in rates as well, but you know I don't know if we're going to new highs. This might be a rally. I'd watch this 434 range. That's still about 7 bips away, but I think this can turn into a selling opportunity. Maybe. What do you think of this, Ryan? And then I want Kman's thoughts too. Where do you think the yen, U.S. dollar yen, will be priced if BOJ does nothing and the Fed eases a quarter?
Probably we'd be up over 152, probably back up towards 155 if the Bank of Japan hasn't hiked rates. We know what the Fed's doing, so that won't be a surprise.
What if they stand pat?
Oh, if they stand pat, oh yeah.
Well, that's the next option. What if they stand pat?
Yeah, 156 probably.
If the Fed stands pat?
Yeah, and the BOJ stand pat, yeah.
Okay. That's back to the highs. So that's your bullish. Okay, that's your bullish setup. Any view on what Ryan is saying today, Ryan?
What I'm saying, I'm saying everything, mate.
I tell you what.
Ryan agrees. Ryan agrees with himself.
I agree myself. Yeah, I can't say anything wrong.
I don't know. I argue with myself all the time, but I'm a Gemini. All right, so there's two of me battling each other all the time. So,
morning,
how about you? Good morning, buddy. How are you? How are you doing today?
Yeah, I'm all right. I'm all right.
Okay, we got to see your picture for a brief second. You came up here.
I don't know why it does this. Every time I come onto Face, my video comes on automatically.
I think it's destiny that you know that you get that kind of visibility. You might get discovered. Oh, that's right. You and Ryan were discovered by Blake. That's right. Blake is Colonel Parker there. All right. So, you know, what do you think possible scenarios? Instead of posing it, what do you think is going to happen with central bank action next week? Fed goes.
Yeah, I think, and to me, it's a let's say mostly general 25 BPs ECB Fed, whoever else, S&P, and then I'm torn between anywhere between 10 and 20 or so BPs by the Bank of Japan. I don't think they will go to full 25 this month.
Okay, but they'll
Assuming
do something.
I think so. I saw the argument of somebody saying that they can't raise or less likely to raise rates because this guy stepped down for being unfaithful. But I don't think that's a reason. Was already trading well above 150 when that news came out. This is just a continuation of it. The
Hold on a second. I just
Yeah,
saw a headline. Biden declares martial law. Oh, hold on. He canceled it. Go ahead, buddy.
yeah.
That's our South Korea imitation. Anyway,
Mm, mm.
go
Um,
ahead.
Yeah, but again, I would still think that we are going to have a twofold December. If Bank of Japan underwhelms, even with the 25 BPs from the Fed, I do think that it's going to be a case of perhaps sell the rumor or sell the Fed and then buy the Bank of Japan also because they are like what 6 7 hours or 12 hours or
Yeah,
whatever hours apart.
yeah.
Um, yeah, then I think we are going to probably go a bit higher. Now, are we closing the year higher? That's still a different thing because I still don't know what's going to happen for year end with the dollar as such, and that's going to be a big question mark for me coming out of all the central bank meetings. But yeah, my general feeling is that the window is still open. They can go. JGPs are not doing anything silly right now. And yeah, but I don't think they will do 25 this time. So they maybe underwhelming a little bit and only do like 10 or 15 BPs or so.
So yeah, I got short euro at the close yesterday, but where was my head at? Trade selection. The big winner is commodity currency, the Aussie. What happened there?
Well,
Um,
apparently, the bit weaker than expected GDP, albeit not a panic number either. And stops below 64.40, and then
yeah,
since then we retested it early day and early morning in Europe, and it's still coming off. What I find striking with the antipodians right now is that euro antipodians are really very big, and that is despite higher yields, despite the stock market doing well and risk not really falling out of bed. I mean, that's a bit of a
And the French government's probably going to collapse today.
sorry.
and then Germany is going to have
And
elections.
Yeah,
French, government's going to collapse probably today after a vote that's coming up here shortly.
yeah, they start to well, they first of all are going to have to vote on whether they will put in the motion, right? So everything starts around, and it's am I right in saying that's already been half an hour delayed? So around 3:30 GMT, PM GMT. So that's in 2.5 hours, and yeah, then we will see what that's going to do. But it's all
One
relatively
bad
quiet.
story after another in Europe. That's gonna, I have targets around 102.30 or so, and it could even stretch into the 101 handles. That's a kind of sentiment I want to have now. No one's going to want to touch Europe, and I don't blame them, but I'll trade the technicals down there.
Mm.
Because there's no reason to buy euro.
No,
Um,
zero.
yeah, maybe that's the reason.
Exactly, Dale. That's what I was thinking as well. If you look at specifically what I was talking about, those euros, the euro kiwi, euro
Crosses, yeah.
whatever they euro crosses, they should not go higher. They should not. I mean, the data are underwhelming. The political situations in the two engines of Europe are not good, and I don't really understand why the euro, but that's what you exactly say, positioning. people
Yeah.
are already in the positions, and then the short termers getting thrown around now and then.
Yeah, it's getting tougher in this environment lately to trust breakouts and then
Especially being
breakout failures. This
especially
is
being December, I would argue.
okay.
It is always a tough, really tough to trade fundamentals going into December. It's always the case, and especially this year coming out of an election, as I've already been saying. So all of that, all of the year-end stuff may have been delayed. We had so many statements already from one and the other. It's a bit tough to trade real fundamentals in December at the best of times. So this year may be one of those years where you don't trade them
Yeah.
at all.
Yeah, you go to Hawaii in December or something like that next year. Anyway, I just wanted to touch upon CAD. The Aussie making new lows for the break. CAD hasn't,
Stable, huh?
but I still think it will. I think it's gonna take out these highs to complete, but wrong under here. Then
And
we're
Dale,
going
just
what do you think?
FYI, we have ADP non-farm in about 4 minutes. So
Go
just
for it. Now take over then, Blake, and
all right.
let's
Yeah,
get everyone.
yeah. Having just continuing on that conversation with December and flows and what the euro's doing. I mean, the euro, we cite all these different things, and Ryan, I was actually listening to your trade-off show with Michael Brown yesterday, as I was writing analysis on Forex Analytics. That's when I usually are listening to different podcasts and different shows. I start writing analysis for all these instruments, and I was watching that yesterday, or listening to it as I was typing. And Michael Brown said something to the effect of, the euro's trading really heavy, or no, the euro's got everything priced in, so maybe we're getting a little bit of an exhaustion here in the euro. But you had a different opinion about that. And do you want to tell everybody what your opinions were about the euro, even though, and it goes along with what Dale was just saying.
Yeah, pricing is always a weird term to use because you never know what's priced and what's not priced. But when you get a market that's come off, I mean, euro's come off, 700, 800 pips from those
Yeah.
112 highs, a real big level. I mean, we were talking about that when we were up there. And pricing only gets you so far. Okay, we stopped going down, but that doesn't mean there's not much more to be priced. The eurozone, who's going to buy the euro? We've had this conversation, for weeks on here. Who wants to buy the euro based on the fundamentals? So if no one's buying it, really, there's only one more direction it can go. But obviously, there might be plenty of shorts already in it. So, yeah, pricing is one thing. I think the euro's heading low. I'm with Dale on that one. I think the ECB, that's going to be maybe one of my trades next year, or going into next year, that the ECB will be forced to cut rates further than they expect, and that they would like. We had Ollie Ren saying that he doesn't think the data right now would suggest that they would be cutting rates to zero anytime soon. I think he's going to eat those words late next year.
Well, and that goes along. Okay, so that goes along with what Kman was just talking about. It's end of year flows. I mean, it's no secret that the market's long of dollars and short euros, and so it's when you see the euro stalling here, and it's just kind of stalling around the 105 level. We already know that Europe's a damn mess. We know growth is horrible. Manufacturing is atrocious. We know that the German, French, governments are collapsing. Yet the euro is well above parity, 5 cents above. That type of lack of follow through to the downside really suggests that the end of year flows could be pretty big. I mean, when you have the dollar struggling to make headway on all this bad news, and then you have equity markets that are up 30% for the year and counting. If you have some dollar selling that comes in, that could easily take the euro back to 106, 107, maybe even 108. And
that's why you fall back on the fundamentals. That's why you
then we fall back on the
if you see a
fundamentals in
move like that.
January. You're right. And we've got less than a minute before the data comes out. But I do want to talk about, speaking of which, I want to talk about the DAX blown out to the upside. The S&P continues to rally, and we're at all-time highs this morning. And I don't know what's going to stop it. And we could really be faced with a blow-off top in the next couple of weeks if the data doesn't get really bad and the Fed remains, pretty loose.
You have
In
any
the next
numbers
couple of weeks.
above the market, Blake? Where the Meltup could
No,
go to?
well, yes, I do. But we'll talk about that here in a second. We have data coming out in just a few seconds.
Okay.
ADP non-farm market's looking for 165,000. We have yields on the left, dollar in the middle, and the S&P right over here to the right.
146.
146, a little worse than expected. It's not a horrible number. This is a not a bad number because it's still showing growth and it's well over 100,000. It's the private data, but it may have missed expectations, but it's not a bad number. Period. End of story. So I wouldn't expect a lot of reaction from here. Ryan, what do you think?
Yeah, no, I agree with that. It was 150 expected on other calendars, so it's thereabouts. Last month's been revised down though to 184 from 233.
50,000 less.
Yeah, that you might say that's another bit of a weather reaction. Who knows? But no, there's nothing to shake the tree out of those numbers.
Yeah, dollar's coming off a little bit. Kman, do you have any instant reaction to that data you just saw?
No, I think ISM is going to be more important today.
100% agree with that. Okay, so let's talk about, and I see Steve is here too. Let's talk about this end of year phenomenon we got going on, because I think this is an important concept. And Dale, you asked me, do I have any levels above the market in the markets? And I'll say, yeah, I do. And we could talk about those, technical levels. But we've talked about and this last summer, I believe it was this last summer, we were right around these levels in June, and this didn't exist yet. And I'm like, man, there is a risk that we're going to get a blow off top here. And we had these discussions, and then the market just grinded higher, found some resistance, and pulled back, and eventually it took like a month and a half. We started to find a pullback, and then, but here we are still grinding higher. And again, this is where liquidity becomes a factor. This is where the Fed becomes a factor. This is where our economic data is still a factor. And then we have companies that continue to make money. It's not like companies aren't making money. Yes, our companies trading higher PE ratios than they probably should. Generally speaking, yes, I think so. So are valuations a little rich? Sure. Historically, yes, they are. But that doesn't mean that they can't continue. And then again, if we have the Fed that is, they loosen by a quarter, but they still leave the door open for more rate cuts in the into next year. And then we have jobs data that doesn't come in horrendous. Let's say we still create jobs. We don't create 200,000 jobs. We can create 150,000 jobs, or maybe 100,000 jobs. But it's weak enough to keep the Fed loose, but it's not weak enough to be crying and worried about the economy. I think that's a recipe for a continued rally into year end, and what could eventually be a blow off top. Because if you look at the S&P, channel resistance, Dale, to answer your question, comes in at 6170. Then long-term channel resistance comes in at 6400. How about if we just start blowing past those levels on lack of liquidity at the end of the year, talking in the next couple of weeks? So we got a couple of key levels, you can call it 6,200 and 6,400 to round it out. Those look two major levels. The market, I'm just talking S&P solely, looks capable of. But let's discuss that idea. And what do you have to say about that, Steve? I mean, we've been watching the markets go higher for, got it,
ever
since we've known each other, Steve.
Yeah.
I think Steve and I met about 9 years ago. So right around where is it? 2000, yeah, I guess 17, somewhere right around here. Steve, we watched the market just go parabolic. So what do you think, Steve? We can't hear you, Steve. You may be on mute, but we can't hear you.
Maybe
All right.
that's what.
Oh, there he is.
No.
Yeah. Yeah.
Yeah.
Go ahead, Steve.
Okay, about the stock market.
Yeah. About potential for a blow off top here, lack of liquidity. What are your thoughts?
Potential of a blow off top. Yeah, although that is always a small probability. It's not something
Always,
that
yes.
that happens like the same thing with a big crash. That is always a low probability as well, right?
Right.
But I do believe, I said it since the Trump election, I do believe that the market is currently working on hype of, upcoming, let's say, better days. And there is no room to be disappointed yet, right? And it's not, there's not gonna be room to be disappointed for at least like the next 3-4 months. I mean, Trump is gonna take over in like a couple of months, and nobody expects something to really happen since day one. So I do think that this grind higher has a high potential of resuming.
Yeah, I mean, I agree with that, but I agree. I don't disagree that everything that you said there. I 100% agree with the point I want to make is just the lack of liquidity, because liquidity is going to become an issue. And if you got to get in, you got to chase, you got to be up, you got to be up at least 30% on the year, like the S&P. And if you're not, your job's at risk. You're an asset manager, you're a portfolio manager. You're going to get funds yanked from you if you're not levering up and trying to play catch up at the last month of the year. No one wants to be in that position, but believe me, there are people in that position. So Ryan, what do you think about this idea about the markets at year end?
There's only one way I look at it. Market's going to do what market's going to do, whether it's Santa rallies or whatever. As I said just before, I will judge it next to what happens in the fundamentals. If I see euro rallying up to 107, 108, 109, and the eurozone economy is crap and the US is doing well, I'm gonna be adding to my shorts and building up a bigger position. And that's really the only way you can take. We've got 3 weeks, 2.5 weeks now. Once we've got through those last central bank meetings, then it's effectively Christmas, and that's when you might see some of these end of month moves really picking up steam as players close their books and prepare for year end and that sort of stuff.
Yeah, and speaking of which, let's I'm just going to bring over Forex Factory, because this is a calendar that I can actually take a look ahead a little bit. I'm gonna filter out some of this crap, and if you go into next week, right? So next week we have the Bank of Canada, we have the Swiss National Bank, ECB, and then the following week, oh no, we do have the RBA too next week. And then the following week, we're going to have the Bank of England. We're going to have the Fed, and here's the FOMC. We have the Bank of Japan, the Bank of England, and mixed in there too. I think we're going to have the Norges Central Bank as well. I'll have to go on a different calendar to find that one. But yeah, we got central bank bonanzas for the next couple of weeks after this week. So it's definitely going to be a busy one. But remember, the Fed is in about 2 weeks time from today. Actually, exactly 2 weeks from today. So anyway, Dale, you want to talk about upside targets. I mean, look at we're at the 127% extension. We're actually 20 points away. The German DAX, you look at the German DAX, we're above the 161% extension. We just completed finally the bull flag pattern, but this, I don't even know where this one's going. Like you start looking at like the German DAX and you think about the German economy, and the DAX is doing its own thing. And it just, again, this is asset managers having to chase everything higher all day long, every day. One of the guys that's not here right now, Nick from Trading Analytics, He's been putting together some short videos. If you're not watching his, videos on Twitter or on X, you should be. He's posting some really good analysis of different stocks, different individual stocks, and the stock market just guiding you higher. And nothing's changing there. Now I want to just hold on for a little bit because we have about 6 minutes before Anas comes on with Dale. But I want to ask the team, and we're going to start with Ryan. I know you focus a lot on FX, but we do have other markets that obviously people are trading. What's going to be your big trade going into the remainder of this week? Following that ADP number. I mean, I know you're probably going to be focused on F1 or the NFP on Friday, but anything in particular you're looking at?
Yeah, well, obviously outside of F.A.C.E, bonds, 10-year yields, and what they're doing, because they've held that 720 despite a couple of little pips under, and that's we're firmly in US data orbit now. So anything we're getting now needs to be seen in that light. So we get ISM later, as Kay mentioned. We get durable goods, factory orders. We get a lot of stuff coming out now. So it's really going to be a shift about the dollar and what's going to happen with that going into next week. Obviously, next week's CPI data, and that'll be the final icing on the cake for Fed expectations.
All right. And Kman, I know you talked a little bit about this Aussie. The Aussie has been holding up really well until last night, obviously.
Until last night. Yeah.
Until last night. We finally broke down. And it looks kind of ugly. Do you follow the Aussie down here, or are you going to fade this move? I mean, we're talking GDP data, and we are approaching some really, really critical support as far as the Aussie goes.
Yeah. I think we're getting close to really very, very big levels there. I might catch a knife if we get there, but it depends why. If we
gets there, define there.
Well, I mean, there is somewhere 63.5, 63.75.
Okay, somewhere down
here. But it depends how we get there, why we get there. If it's just like a continuation of what we are seeing now without US data showing, I mean, too much strength. If it's due to US data, it's probably not wise to really counter trade too much right now. Especially before the round of central banks, but if it's with lukewarm numbers and the market still wants to push it, then I think I might there. And for the time being, I'm actually more interested in the Kiwi. Really, that's also coming into very nice levels here, and that is also something I'm keeping a very, very close eye on.
Stole my thunder there. I was gonna just say, I love the Kiwi because we're at the 78% retracement. If we can stop here, like right here, like right now, this would be an inverted head and shoulder pattern, a perfectly symmetrical one too, that would be setting up. So yeah, I agree with that. Real quick, guys, I want to talk a little bit personally. I want to talk a little bit about the euro, and I want to make sure that everybody, I make myself clear here, because there's been a lot of talk about, is that gap filled? Something in our community where people are asking, and I actually think that gap is filled. I think what's that?
That was me. I was just being pedantic. Don't worry about it.
Oh, you're being an ass. All right, I got it. But still, you know what, Ryan, I'll say this though. Listening to your conversation yesterday, I think the Euros had a lot of bad news, and I do agree with you wholeheartedly that I can't wait to short the Euro sometime in the next year. I'm like super excited about being short Euros, maybe at 107, 108, but I think there's so much bad news right now, and it's not like an unknown. Now, let's say the Spanish government starts to collapse. Okay, now we're talking, okay, maybe we might head down to the 103, because that's something that not everybody's looking at. But all this bad news is in the market. And so if the US data doesn't come in exceptional this week, I think the euro trades back up to 106 and maybe back up to 107 by year end. So that's one thing I want to be focused on at the end of the week, is if the US dollar.
Just on that quickly, Blake, I want to. There was a reason why okay, it was a big wild move and everything, but there was a reason why we cracked down through into the 103s in one of the biggest currencies in the world, and that's because the market is waiting for something bad. Okay, the reason we went through that 103 area was because there were plenty of sellers to take it there, and okay, it was low liquidity and whatever, but we came quickly back above. But that just shows you one errant headline, France later, Spain or whatever, as you say, and it won't take much. As much as we're holding support here, it won't take much to push it down back towards those lows.
A one Trump tweet could
Yeah.
put it down there,
Exactly.
right? When does the focus turn from Mexico and Canada to Europe? And that day could be coming like literally within 30 seconds or 3 weeks. So that's always on a knife edge, right? Right, Ryan?
Exactly.
Hey, the one country that may be shielded from it a little bit is the UK, and I think sterling looks good too, to a certain extent. That's because you guys don't make anything. I mean, if you made something,
we make people
have an issue, but you guys don't make shit. So
we make people, as you know.
Hey, we make Aston Martins, mate. Come on.
all right, guys. So hey, listen, to continue this conversation, make sure you guys check out Forex Analytics. Come jump in the chat room with us. This is the kind of crap that I have to deal with all day long. Is great Kman charts and a lot of crap from Ryan. And we talk about markets and put up our charts, and everybody talks about what trades they're in and where they're buying and selling, and you can see where my open positions are at all times. When I closed out my Aussie Kiwi last night, what open positions I have, hey, and keep a running record of it. It's all right there. So if you want to be in a great community, probably the best community literally in the markets, and you have a tool that gives you live squawk feed and analysis on 30 different instruments, check out ForexAnalytix when you get a chance. All right, guys. I'm going to pass it over to Dale. Dale, thank you for guiding us today, as always. If you guys trade energy in any way, shape, or form, you got the right man here today. Anas, he's gonna give you his thoughts, and hopefully he'll maybe give us some views on when the hell we're gonna break out of this this really nasty range we've been in crude oil for like literally for the last couple of months. Hopefully we'll get some guidance from here. So Dale, have a great interview. Ryan, Kman, Steve, thank you all so much for being here today, as always. And Dale, looking forward to your continued guidance here.
All right, thank you, everyone. Anas, welcome back live from Cairo. Is that correct?
Yes, good morning.
Okay, what are you doing there, buddy?
I have some work. I am on a speech tour anyway throughout several countries. So I will be back on the 20th in Texas.
Okay. What's the reaction in the Middle East to a red wave in the U.S.?
Well, they welcome it. I mean, generally speaking, people were, especially the governments of Saudi Arabia and UAE and Kuwait and etc. They were really fed up with the Biden administration. As you know, they had serious problems with the Obama administration before, especially regarding the war in Yemen.
Yeah.
So they were fed up with that, and they were fed up with, if you recall, that President Biden came into Saudi Arabia. And one of the, he came in after a major feud with Saudi Arabia and the Arab countries. And he came in to give a speech. And instead of focusing on the main issues, as you know, especially the Palestinian issues and others, he was talking about
the journalists.
Gay rights.
Oh,
he was talking about gay rights.
In Saudi Arabia.
Yes. Yeah. And so the Saudis replied, the U.S. press did not really emphasize this point or cover it. When they opened the session, because they knew what he was going to talk about, seems they were given the speech ahead of time.
Yeah.
They opened the session with a phrase from the Holy Quran, basically regarding the gay issues, which is very strange in every diplomatic sense.
Yeah.
To start something like this. So they were really fed up, and they welcomed Trump. Just to show you how good those relationships are, if you recall, about just a couple of weeks ago, Trump attended the day when there was this boxing match, there was a championship in New York where Trump attended this championship, and on his left there was Elon Musk, and on his right the head of the PIF, the Saudi PIF, that the Public Investment Fund, Yasser Rumayyan.
Yeah.
So even he is not in office yet, and the Saudis are on his right hand, on his right side.
Yeah. That's happening
so
everywhere.
Yep.
So let me
Anyway,
ask you this. I know we want to
ahead.
talk about oil, but why don't we start with what effect the tool that we keep hearing about is, the hammer, tariffs. Tariffs, a non-factor when it comes to energy with this new administration, buddy?
No, it basically we'll be writing about it in our reports almost on daily basis.
Okay.
I mean, it's like you said, it's a hammer. It's really killing oil. And the reason why, because it's killing economic growth around the world, especially in China and Europe. And now if sanctions basically, or we'll talk about sanctions in a minute, but growth in China, as you know, prevented oil prices from rising again. So those tariffs, although if we don't see any tariffs on oil imports or oil exports or anything else at all, they are wreaking havoc on the oil market, simply because they are reducing economic growth all over the place.
They take more money out of the pocket of people that could be spent on energy.
And not only that, basically, because
But
they may not even collect much out of it, but they are scaring investors, scaring companies from expanding, scaring companies from opening offices in other countries. It just kind of all kind of things. But in China in particular, the engine of growth in China is being killed because of those trade wars.
What's
and therefore,
that? Export?
China,
Their export?
yes,
Export business.
yes.
Okay.
So their stimulus did not work because they went for other sectors that do not yield that much growth from the stimulus. So we are not seeing growth in China, and that's leading to another problem, because we are seeing several reports in the media and others saying that oil demand in China peaked because of electric vehicles and LNG trucks, and this is nonsense. Based on our studies, about 75% of the oil growth in China is related to economic growth, not to electric vehicles or LNG trucks. So we do need that economic growth in China to see oil prices going up again.
Okay, about oil prices going up with President-elect Trump coming in, deregulating, drill, baby, drill. Is that making people, I mean, if I ran an oil company, I'd be a little hesitant to go out and spend a lot of money for development.
We did publish 2 reports along those lines. If you don't mind, I will frame the points. We have 3 points today. The first point is, can Trump increase U.S. production as they promised? They wanted to increase U.S. production by 3 million barrels a day, drill, baby, drill, etc. So that's one report that we published last week. Then we have another one, is Trump enforcement of sanctions on Iran bullish for oil? And I will answer that. And then we have the OPEC Plus meeting tomorrow that Bloomberg and Reuters missed up completely in their reporting. So I think the audience will benefit from my comments today regarding this, because I'm correcting Bloomberg and Reuters. Let's start with the first one. Can Trump increase U.S. oil production as he promises and as he and his team envision? And the answer is no, they cannot. And there are several reasons for that. Trump and his team still live in 2016. And 2025 is not 2016. He came in to the political circle in 2015 and 2016 when we had a market crash, as you recall. Oil prices crashed in 2015. And as a result, U.S. production declined by about 1 million barrels a day, Companies were losing money. We had many bankruptcies
Yeah.
at that time. So all he was hearing was complaints from the oil industry. And he promised to increase production, and he did. And we've seen major increase in production in 2017 and 2018. And he and his team think they can repeat that. The reason why they mentioned 3 million barrels a day just in the last 2 days, because the increase in 2017 and 18 was 3 million. So they think they can replicate that.
Okay.
But
Why
that's
can't
not
they?
the case. And they cannot for the following reasons. First, interest rate we started with almost zero interest rate. Even after the increase in 2017, interest rate was very low.
Yeah.
And it is only a portion of the rate today. Today is multiples of where it was,
Right.
and the oil industry cannot operate the same way it was operating at that time. So that's number one, interest rate. The second one is, at that time, the number of oil companies and the number of workers in the oil sector was way, way higher than what it is today.
Okay.
And that's important because the shale industry was dominated by small independent producers and medium-sized companies. Now they are controlled by Exxon and Chevron. Why this is important? Because if you are an independent producer or a small company, your objective is to drill,
Yes.
find the oil,
And sell
increase
it.
reserves, and
Yeah.
sell it. Absolutely.
Yeah.
So increasing production was the model.
Right.
This is not the model of ExxonMobil and Chevron.
Control production is their model.
Correct. Correct.
They become OPEC.
Correct. So we have major differences between that time and now, and therefore they cannot. Here is the last issue. I know this issue we can talk forever on this, but the last important point on this is this. He came in 2016 after the decrease in U.S. production. Now he is coming in after massive increase in U.S. production, and the companies were making major, or basically record profits.
Right.
And as you increase production, the level of replacement because of the decline rates in the field gets larger and larger and larger, which means that most of the investment in the oil industry right now goes only to replacement just to maintain production.
Interesting.
And
Okay.
if you look at where we were in 2017 and where we are now, the level of replacement is double where it was. So yes, we can have drill, baby, drill, but it's barely just to maintain production.
So it's kind of like investor relations for a bankrupt company.
Correct. So that's
All right.
the second issue. The second issue is
All right.
we have some people who are bullish on oil because they think that Trump sanctions on Iran and enforcement of sanctions, because the sanctions are still there, but they say he's going to enforce the sanctions, and the enforcement of those sanctions is going to reduce Iranian oil exports by more than 1 million barrels a day, as it did in 2019. Again, 2025 is not 2019 for the following reasons. Because Iran, when the sanctions were imposed in the fourth quarter of 2018, Iran was selling oil to about 20 countries, selling different types of crude to those countries. Some of those countries were scared of Trump, so they stopped their imports from Iran. And then Iran itself refused to sell its oil to others because they can sell the oil, but countries cannot pay them. So why I have to invest in shipping the oil to you while I get nothing?
Right.
So they stopped. And that led to the decrease in Iranian production and exports. At the same time, after they signed the deal with Obama in 2014 and they got the money that been frozen, they decided to invest strategically in new fields and close the older fields. And closing the older fields led, of course, to the decrease in production and exports too. Now they don't have those older fields anymore. At the same time, the quality of crude changed because when they stopped exporting to those 20-something countries, they shifted to China. China is the only customer right now. And the Chinese refiners said, look, I cannot take those qualities of crude. I need certain qualities. And the Iranians got stuck. So they had to close certain wells and close certain fields because of that. But later on, they invested only in the fields that produce oil that match what the Chinese want. So all the reasons that led to the decline in Iranian oil production and exports in 2019 do not exist today. At the same time, the payment system is not subject to the US or the European countries. So the US cannot control that. And therefore, it is completely out of the US control. Now, what the US can control, and that's what we explained in the report, the Chinese oil majors are listed on the stock exchanges of Europe and the United States. At the same time, they have access to capital from US banks and European banks. So they could be subject to sanctions and they could be punished. So the Trump has a leverage over those. And we've seen some reports in the media, but they were the wrong reports because they said, look, this is going to reduce Iranian exports. Absolutely not correct, because we've seen this before. This happens so many times in the past, where the Chinese government will tell the oil majors, stay clean. And then they will tell the smaller independent companies who have no access to European markets or US markets and no relationship at all. So you cannot even pressure them. Tell them, look, go get me the Iranian oil. Once that oil is inside China, you give it to the oil majors.
Okay. So let me I just want to address the fact that, something Blake brought up. The fact, WTI almost looks like a currency in us, where they've controlled the volatility in it. They've taken it out of it, and we're really trading for a couple years now in a pretty tight range, and the ranges are even compressing more. So, I was taught never sell a sleeping market, and WTI's taking a nap in this range. What do you think is going to take us either down to 60 or break out over 80?
I'm going to finish. Yes.
Okay, go ahead. I'm sorry, I interrupted you.
So with the Iranian issue, here is where things could get really bad. People are bullish because they think that the enforcement of the sanctions on Iran is going to cause that breakout upward. But they forgot what happened in 2018. When Trump imposed the sanctions on Iran, prices declined by 29%. We had almost a crash in the market. So we have the opposite. And the reason why, because he did ask Saudi Arabia and other countries in the Gulf to compensate. So they did increase production, they did increase exports. And what the oil bulls have to be careful with right now with this, Trump will not, I'm going to speak slowly because I want to emphasize the point, Trump will not reinforce the sanctions on Iran unless he gets guarantees from those countries that they will compensate.
And will they?
And that is bearish. Well, the decision is completely political. Right. That's what happened in 2018.
Well, the Saudis are sitting on it. Yeah, the Saudis are sitting at his right-hand side. So is that a done deal? They will compensate.
Well, we don't know, again, because it's a political decision. And we've seen it before. The bureaucrats were against it, but the politicians basically decided to go with it anyway. So Trump sanctions on Iran could be bearish, not bullish. And related to that is the OPEC Plus meeting tomorrow. The media messed up the story big time because they are saying that OPEC is studying the possibility of extending the voluntary cuts to the end of the first quarter of 2025. OPEC Plus is one thing. The 8 countries that made the voluntary cuts within OPEC Plus are something else. They are completely different, in a sense, almost legally different. The meeting tomorrow is going to be virtual because it's non-eventual, has no impact, nothing. The biggest event is on the 10th, not tomorrow, where the 8 countries that cut production voluntarily will meet and decide what they are going to do with the voluntary cuts. So the media, if you look at Bloomberg and Reuters, etc., they are not making that distinction. tomorrow is not the day to decide on the voluntary cuts. It's the 10th.
Interesting.
Most
Yeah, most
likely
people
we will
wouldn't know
see
that.
I am really fed up because Bloomberg and Reuters are misleading people on this.
All right. Well, we need
But
an El Haji report on this.
well, we do that in our daily report for those who would
Right.
like to subscribe.
Okay.
But the issue here is it is very clear from all the evidence we have that they are going to extend the voluntary cuts. But we have two problems, Iraq and Kazakhstan. And both of them are violating their quota. Both of them promised to compensate for earlier increases, and they did not. And what the Saudis did, this is something new, and it could be a very successful approach. They enlisted the help of the Russians. As you know, Russia is part of the OPEC Plus. Now, Russia was one of those countries that violated its sanctions, but they were able to compensate and cut production. If you look at their exports in November, they did cut exports by a significant amount, by 200,000 barrels a day. But Kazakhstan exports went up through the roof, and their production went up through the roof. So what they did is they brought in the Russians to the table to pressure Iraq and pressure Kazakhstan. And Russia has tremendous leverage over Kazakhstan. And the reason why, almost all Kazakhstan's exports go through Russian ports. So the Russia have control over the pipeline and have control over the port itself, which means that they can literally shut them down. So we expect that the Kazakhstan government will yield and do something before they get hit, either with a price war from the Saudis or the Russians doing something to the pipeline or to the port.
Okay,
So
Russia has a lot of problems in different provinces. I don't know if Kazakhstan has been one of them, but Georgia and the ruble is getting killed. Why does it seem to the world that he's in a position of strength when his currency is severely under attack, making record
it is really
lows?
about the control of a port. So this is a physical control
Okay.
of the spigots. So they can do that without any problems. I just would like to add Syria to the mix because the Russians just lost the northern Syria.
Right.
And they are, for the last 3 days, they'll be bombing civilians in those big cities in northern Syria.
Yeah, the Russians. Okay, well that was their tactic 10 years ago when they stepped into the vacuum. I want to ask you if Trump doesn't see sanctions being effective, is it possible
he's not going to see it that way? He is going to using his own words, basically, is going to be the most powerful and the most beautiful.
Okay, well then, is it possible that he gives a go light to Israel to take out Cargill so that the U.S. has a larger percentage of market share? And his friends.
I don't think so. I think he always claimed that he is anti-war and he does not want the expansion of those wars. He wants to stop the war in Ukraine. He wants to stop the war in Gaza.
Well, why do you believe that when you don't believe other things he said?
I mean, you have a great point there, but the issues here that there are things he cannot control. For example, when we talked about Iran sanctions, he cannot control it because of the reasons I mentioned. But in case of Ukraine, he had the leverage because the U.S. been sending billions of dollars and arms and weapons to Ukraine. He can stop that. He can pressure Israel to stop the war in Gaza. So it depends on where he has the tools.
Yeah.
And he had the tools to stop the wars. He has no tools to, in fact, if you want to expand on this, yes, he has tools to literally strangle Iran, but that requires a massive amount of political capital to coordinate with other countries, including China. And with the trade war, it's very hard to see that working.
There's no cooperation coming there. Do you think? Yeah. Okay, so what's going to take us out of this range? Do you have a narrative that's going to give us a reason to trade crude? Because, when things are like this, it's just range trading there's no trend. Will we get a trend in WTI in 2025, buddy?
Based on what we have right now, based on all the information we have, and as you know, these things could change overnight. This is the trend you are going to see throughout the year.
Oh my gosh,
Tight range, and
right.
we see prices for Brent in the 70s, WTI in the high 60s, low 70s, and that's it. We have there is no hope for China for now. Those trade wars are really killing demand, and OPEC is plus, and those V8 or the 8 countries are going to maintain voluntary cuts as is. So I want to look at it from a positive point of view. I want to look at this low volatility and continued range as a success for OPEC plus policies.
Okay. Yeah, I mean, we don't have the same interests. Traders want movement.
Correct. I agree with you.
So, right, and central banks, when they get this kind of action in their currencies, they're happy. That means they don't have to tweak anything. But so what the takeaway on trading WTI is that I can be Rip Van Winkle and go to sleep for 2025 and wake up out here, and it's still going to be a $70 price on WTI, right? I could take a 1-year nap.
Correct. So,
all right.
And unless if we end up with a trade deal with China, that's going to be very positive for WTI.
Okay. All right. Well, gosh, I mean, Brave New World starts. Are you optimistic about everything, Anas? You feel good or worried going into 2025?
I am very worried. I mean, looking at what's happening in Syria and Georgia, and North Korea. Sorry, South Korea.
South Korea.
South Korea, correct.
Yeah.
They have the martial law and all these issues, etc.
Right.
And looking at what's happening throughout the Middle East, it's very hard to be optimistic.
Okay. Realistic Anas El-Haji giving you the facts and also telling you how he feels about what's going on over there. But you make business decisions based on your head, not your heart.
Absolutely.
And Anas El-Haji, inshallah, my brother. And always great talking to you, and people were looking forward to hearing you, and have a great trip abroad and safe journey home to you, my friend.
Thank you. Thank you very much.
All right. My friend Anas El-Haji coming here and sharing his hard work with us once again. So that's a wrap. People are thanking you, Anas. You're a favorite here. And everyone else, you could go ahead and join the team in 18 minutes on the Morning Edge. That's a wrap. Good hunting the rest of the day. See you tomorrow. Don't just count your pips, count your blessings. Thank you, everyone. And thank you from Hamas. Adios.